Okay, I want to say good evening to everyone and welcome to the House of Impulse Indicators, hosted by HGSI and presented by our strategy partners, Ian Woodward and Ron Brown. My name is Debbie Moses, Director of Customer Services, and this is the second in a three-part series on the powerful systems of indicators developed by Woodward and Brown. Now, before I introduce our presenters, I'd like to briefly describe tonight's protocol. You will be muted throughout the presentation, and Ron and Ian will present for 75 minutes. Questions can be typed in the chat pane at any time, and we'll answer them at various intervals during the evening. If for some reason we don't get to all your questions, we'll respond to you after the program. This session is being recorded, and the video is posted at our website's Learning Center. And in fact, if you missed part 1 2 weeks ago, it's also posted there. That evening we covered Kahuna, Eureka, and Phoenix. So I want to make a quick mention about the various educational programs we're sponsoring in the coming weeks. On Sunday, February 20th, power user Jeffrey Scott will conduct his bi-weekly live webinar on navigating our software. This is for new users and anyone wanting a refresher. And please email me if you're interested in attending one of his sessions. Jeffrey does a great job taking users under the hood of HGSI. And now, the following Thursday night, February 24th, Ian and Ron will present part 3 of their Impulse Indicators series. That evening, they'll be discussing bingo, bango, bongo, the Hindenburg omen, and also the high jump. And announcements will go out the week before. And last but certainly not least, our semi-annual workshop is scheduled for March 26th to 28th in beautiful Palos Verdes, California. And this is a great opportunity to work directly under the guidance of Ian and Ron and apply what you learn in this indicator series. You can read about the workshop and register at our website. I have the link up here on the screen, or you can just click on the product button on our home page. So without further ado, I now want to introduce our first presenter, Ron Brown.
Hello, everyone. You'll have to forgive me tonight. I've come down with a fairly serious cold, but we're going to get through this anyway. Now, what I'm going to concentrate on tonight are the elder force indexes, and also I'm going to talk about accumulation distribution and explain what goes into that. I think a lot of people really don't understand how that is calculated. And accumulation distribution is a proprietary indicator, but I can certainly point you along the path of how we get the numbers. Anyway, I put this little disclaimer in here just so you aren't going out and taking any of these trades that I may look at tonight, and if you do, you're on your own. But we're not investment advisors, and I'm an HGSI user just like most of you are, so I just wanted to point that out. Now let's go ahead and get started. I'll start with the 6 trading rules for the force index. Now this is based upon work by Dr. Alexander Elder and a options trader in Chicago named John Sarkett. And it's the rules actually came from Elder's first book, Trading for a Living, and then I believe they're in the second book also. But what I've done is I've tried to implement these with some variations for HGS Investor. So the force index itself is today's closing price minus yesterday's closing price times today's volume. So what this tells us is if there is a big move in the market accompanied by volume, the force index numbers are going to be pretty high. Since it does take the volume into consideration, the high cap stocks, which trade a lot of volume, will have a higher number. Now the numbers aren't important. You don't have to worry about that for the most part. But I just wanted to give you the definition. And then the force index is smoothed by the 2-day exponential moving average or the 13-day exponential moving average. So there's one fast force index and one slower force index. These are generally short-term indicators. In case any of you don't know, the exponential moving average formula is a moving average of data that gives more weight to the more recent data in the period and less weight to the older data in the period. So the rule number one, and this is probably the rule which, in a bull market, which is used the most. Buy when a 2-day exponential moving average of the force index turns negative during uptrends. What this means is the 13 is positive and the 2-day pulls back, and that can give you a buying opportunity. With this buy stop, sell stop trading tactic, and this is what John Sarkett and Elder recommend, rather than just buying on the pullback. If you wait for the prior day's high to be taken out, more than likely the trend is going back up, especially in a strong bull market. In a choppy market, that isn't necessarily true, but rather than just buying, if something or if price is pulling back, you may want to see if it stops and goes up again. Now, I just threw some views together here, and this is from the HGS 100 Smart Group, and this is on the 4th, and that was, what, about a week ago. And here's the rule number one. And by the way, I'll show you where all these rules can be found. Everything that I talk about in here tonight is available in your program as it is. There's nothing new in here. So you can see that when applying this to the HGS 100, the 13-day force is still positive. It's green, but the force 2-day is negative. In other words, it's a pullback. And you can see it right here. The 13 is positive, and the force is pulled back for a few days. Now, this chart is what we call a visual filter back test chart. It's a VFB force index 2 and 13-day with the 22-day moving average. It also has a 50 in here and the group. But what this shows is when the 13 is positive, that's a green area, and then the white area is where the 2-day pulls back. And you can see, just looking at this chart, there were many opportunities to get into this stock. Now, it pulled back pretty hard here. This is why you probably don't want to just buy on the pullback, because it came down from around 87 down to around 81. So you'd be sweating that out. It's better to wait for the prior day's high to be taken out. So the buy point here would be right on this candle here, because that high was finally taken out. I don't believe it was ever taken out on any of those others. So that's rule number one. Now, rule number two is just the opposite. Now, in a market like this, it's pretty hard to find a lot of good candidates because the trend is up, and it has been for a long time now. But it's the same thing. I'm not going to read through this. There will be a PDF file or the PowerPoint posted on the website, and you can read all this at your leisure. So here is Elder rule number two, and you can see that the 13 is negative here, and the force 2 has turned green or pulled back up towards the 22 period moving average. I use the 22 as part of the formula in the filter, and the stock, or security I should say, is going up as long as it remains above the 22 period moving average. And you can see down here it got into neutral territory, and then it went back above, but it's just been sloshing along here for several weeks now. Now, rule number three, buy when prices fall to a new low while force index makes a more shallow bottom. Bullish divergences between the 2-day force and the price give strong buy signals. A bullish divergence occurs when prices fall to a new low while force index makes a more shallow bottom. I realize that's a mouthful, but there are filters in here, and the filter is on rule 3, and you can alter the number of days down that you want to see. For example, you can see this days down column right here. I have 3, 2, and 2. That means these stocks have pulled back, but the force index has turned positive again. And on this, in this particular example, Noble Energy, the force 2 and 13 both turned positive, but that isn't the requirement. In the filter, I used the days down. Now, that was just recently added to HGSI, probably about a year ago, so we're able to do this. And It allows you to find pullbacks which may be a little bit deeper than the 2-day force. You can see the 2-day force went negative here, and it's turned positive again.
Ron, you might just mention that days down, if it's showing 3, then it really means 4. You add 1 day to the number that's in the column.
Okay. Whoops. I went too far. Let me go back here. If I cough occasionally, just ignore it, please. Anyway, elder rule number 4, same thing, just the opposite. When they rally to a new high, well, the force index traces a lower second top, and I do this with the filter. So the force index 2 is turning negative after it's come up here to a higher top, and then it's turning negative again. Once again, shorting these stocks in a market like this has been pretty tough. Okay, let's go on to rule number 5. Now, rule number 5, Elder says in his book, when the 13-day EMA of the force index, when the 13 is above the center line, the bulls are in control, but that isn't necessarily the case, or that's not the way I see it. So I have the requirement of both the 2-day and the 13-day being positive to show that the bulls are in control. Also, when the 13-day indicator flutters near its center line, it identifies a trendless market, and this is a warning not to use trend-following trading methods. And this essentially is a trend-following method. What you're trying to do is get in early and certainly hope the trend goes up, and I can show you on this slide what happened. Now, we all know that if you've been watching the market, you know Acme Packet has been a great stock. Finisar has been great. These are the number of days since the crossover to the upside. 0 is the crossover day. So Finisar has had a 2-day crossover to the upside for 8 days, and then the 13 came along and confirmed it 5 days ago. It would be 4 plus the 0, which is the way you have to think of it. And look at this move here based upon the gap up, and both the 2 and 13 went positive, and this force index histogram, and this is why I use it in the chart, so you can actually see the force, and the bulls were clearly in control. But guess what? Right after this, somebody, an analyst came out the next day and downgraded it, and it went down. So, but that's the nature of the stock market. Let me go back to that for just a second. I mean, here's where you want to get in anyway. You want to get in back here. You don't want to. Here is a pullback and a buy up, but with this double move here where the bulls are coming in, that's the ideal place to get in. Now, it's hard to take these stocks when they've gapped up like this, but that had to be on earnings, and look at the volume and look at the power in that histogram. And rule number 6 is just the opposite. When the 2 and 13 are below the center line, the bears control the market, and when above the center line, the bulls control it. So you can read this at your leisure. I'm not going to spend time reading it because the hour is going to get away from us. And then here is rule number 6. You can see that AIG, look how bullish it was up here. This histogram was well above the center line, and then when it broke down, the 2 broke first right here. Well, it broke here, and then it popped back up, and then it broke down again, and then the 13 confirmed it right at this point. Yes, it had, I didn't want to do that. It had already started to make its move down, but you can see that it went a lot further because this force, this histogram, indicated that there was a lot of power behind this move to the downside. Okay, one final caveat. The force index is not perfect, nor is any other indicator. It's best used to confirm other indicators, and when it is wrong or when it is misinterpreted, your money management skills should preserve your capital for future opportunities. Now, as we go through these online workshops, you're going to see how we tie all these in together with the kahunas and the eurekas and everything else. And generally, they pretty much work together. Now, let's talk a little bit about demand and supply. What I did with demand and supply is I just took the force index and made some modifications here. And I'm going to quickly go through these. In fact, I don't even think I'll read them because this is something you can read on your own. I'm not telling most of you anything new here anyway. So let me just quickly get through these slides. Okay, use the warehouse demand key, and you can use this demand just like the force indexes on markets, ETFs, sectors, industry groups, stocks. The demand keys require that both the 2 and 13 are positive or negative. Now, what makes this different than the bulls are in control? It's essentially the same thing, but what I do is I use a combo ranking to sort and get the most recent crossovers at the top of the list. And I'll show you that here when we get into the program. And the early warning force index keys are the 2 DEMA force up and down. Okay, top-down demand using industry groups. When a group passes a screen, you can move down to the group level to see stocks meeting the same criteria. In other words, if you're doing top-down and you're looking for groups that pull back, you can just right mouse click and go down to that group and look at the individual stocks that are also pulling back. A group showing strong demand will have stocks within that group showing strong demand. Prospective stocks should not be far from the demand levels if going long or supply if shorting. And here's a chart. This is Agilent Technologies A, and I just showed you some demand levels here. Here's demand, here's supply. It broke past supply, made a nice run here, and then it got into the consolidation area. Demand, supply, broke out of there, and now it's in another one of these right now. In fact, it is trying to break out of here right now. Now, looking at this chart, it's the same thing. It's A again. I just highlighted that supply is overcoming demand here when both of these force indexes turn negative, and then when they both turn positive again, the demand is overcoming the supply. And this is a chart which is in there. I like to use this for the demand chart because it gives me a very quick visual about when the 13 was positive on this stock, the 13-day force. Look how long this run was here. And then it got into a choppy market. Then it broke out again. Both force indexes fired. They fired multiple times up here, so there was some whiplash here. But it really didn't break down much. Looks like it got below the moving average right there. But for the most part, it was consolidating again. Once again, if you can imagine this, here is demand, here is supply, and then it broke through it again, and it turned green again, and it had another nice run. Then it pulled back again. The supply is overcoming the demand. And now I'm going to talk a little bit about accumulation distribution, and then we're going to get into the program and go through some of these things. Now, percent AD, we usually use the letters, accumulation letters, A, B, C, D, and E. But before, we used to use the percent AD, and that's percent accumulation distribution. And this is in your help file, by the way. You can just type the word ACCUM, and it'll take you to this page, and you can study this and get a feel for what it does. But essentially, A is anything over 0.60, B is between 20 and 60, and C is between 20 and minus 20, and D is between minus 60 and 20, or minus 20. I'm sorry, there's a minus there. And then E is below 60. But it measures the strength of money flow in or out of a security or index. Now, it's a proprietary indicator to HGSI.
Ron, if I may come in for a second, people have asked, what is that JAD?
Oh, I meant to mention that.
Yeah,
go ahead.
Go ahead.
No, you go ahead. Give my voice a break.
A good old friend of ours all of 12 years ago, must be 1998. My heavens, time flies when you're having fun. John was the one who came up with it, and so we felt we'd give him kudos by putting JAD there, John's Accumulation Distribution. There you go.
Okay, so the factors that go into percent AD are the Chaikin 21-day money flow. That's an indicator that's been around for a long time. Volume, the relationship of price to the moving averages, and these are smoothed over 4 days. So when you have accumulation, when you get a big jump in a big market day, just remember that these are smoothed over 4 days. So it takes a little time sometimes for the accumulation to catch up. But the AD velocity compares the AD to 10 days prior. That's not. No, this is what I wanted to emphasize. The AD direction shows a relationship of percent AD compared to the prior day. So this is the short-term accumulation, and AD velocity shows the relationship of the AD velocity compared to the prior day. So these are the short-term. If you build a warehouse view with the AD direction and AD velocity, in addition to regular percent AD or the AD letter, these are going to react much faster, and then the accumulation will kick in. Now, there's a reason for that. I mean, just because you have a big market day, it doesn't mean that the market's under accumulation. So you want some time for it to build, and that's why all of these factors go in here. Now, looking at this is A again. I just was kind of stuck on this, so I'm going to use it. This is a percent AD line now. If you look up here at the top, this ribbon, and by the way, these charts are all in your program. Dark green is A accumulation, light green is B, yellow is C, rose is B, and bright red is E. So it got down. It was under A accumulation right here as it was moving up, and notice where the green line is up near the top. That means that it's above 60 in order for it to turn green, and then here it fell below 60, and then it just kept going down as this fell down. Now, on the 4th, the other day, there was a big volume day and a huge white candle, and you can see the accumulation starting to come back in to A. Both of these lines turned up. This red line tells you where accumulation was 10 days ago. That's what that does. I primarily look at the green line and this bar up here, and I like to see the relationship to the moving averages and the volume. So that's what it does. Now that's the end of the slideshow. So let's go ahead and I need to get something up on my other screen here, my notes, so I know what I'm doing. Do you have any comments, Ian?
Well, I'm having an easy night tonight. There's not a single question, but I can tell you everybody's attentive, and I can see that. They're watching you, and that's how we like it.
Well,
but
that's
of course,
good.
feel free to ask questions along the way or after the show is done, and between us, we will answer them faithfully.
Okay, I do want to point out for some of you who may not know this, some of you are new to HGSI, that all of these views, and I have customized this for this presentation. Well, Ian's folders are in here from last week, but I've brought in the accumulation ETF, accumulation indexes, and stocks. If you put these on all securities, it'll just show you ETFs or group indexes and stocks here. And then here's demand supply. I'll go through those. These are all of the elder force index keys. For those of you who have been with us a long time before version 7 came out, these keys were assigned to the plus and minus keys, I believe, and it was a force up and force down. And then here's the force index rules, and these are the ones I'm going to be concentrating on. But the point I want to make is, if you go in here and click on choose Create Warehouse. All of these views are under Woodward and Brown reference library, and all you have to do is grab one, and I'm not going to, well, I'll just grab something else. All you have to do is grab it and move it up, and then you can customize, which is very nice because we're all not going to use everything that's in here. There's a ton of stuff in here that's just been built over the years, and it's kind of like my office. I don't want to throw anything out. So anyway, let me delete this one that I just dragged up there to keep it out of the way. And let's go ahead. Now, if you're going to use these impulse indicators, it's best to narrow your search to stocks that you want to watch. Now, I'm currently in the SG Style Growth, which is down under Styles, and you can see there are 307 securities in here now. So these stocks, let's take a quick look at this filter. $10 and above, trading 100,000 shares based on the 50-day moving average. The revenue growth trailing 12 months is 20%, and the earnings per share growth trailing 12 months is 20%. The EPS change is greater than or equal to 20% compared to the same quarter 1 year ago, and the previous quarter is compared to the same quarter 1 year ago. I want some institutional sponsorship, and this RS greater than 0. Make sure that there are no IPOs in here, because you have to have the stock has to trade for 6 months before it's going to get an RS rank. So that's why I put that in there. So I have this list of stocks. Now let me make a group from this list very quickly, and I'll just call it SG Style Growth. By the way, this is being recorded, and you can go back and follow this process if you want to. And I'm not even going to generate the index, but now I have this group here that I can start massaging, and I want to go up to my impulse indicators, and let's just take a look. I downloaded earlier, so I think most of the stock data is current here, and let's just start with the Elder Force Index rule number 1. And just by moving down here to this folder and clicking on number 1, you can see that I have 44 stocks out of, I think there are 309 or something like that. And these are stocks where the 13 is positive. You can see that the 13 is positive. This column is a positive 13, and wow, what's this Geo Resources? It's been positive for 115 days. It must be a buy. No, it isn't. Oh, there's a beauty. This went positive on both the 2 and 13. Clear back here and look at all these buying opportunities, which would have been picked up by the rule number 1. Here it's pulling back multiple days now. You want it to take out. It may bounce off this 22, but you wanted to take out the prior day's high before you get in, because had you bought it this first day here, right here, you would be underwater. But let me get back up to this. This Force Index 2-day, notice the very small number here. Now this tells me one of two things. There's very little selling pressure on this, or it doesn't trade much volume at all. Notice the number, minus 640.08. Now compare this to Apple down here, where there is a huge number. Now I sorted this combo to bring the combo sorts to bring the smaller numbers to the top of the list, because what I would like to do is just flip through these, and I'm looking for stocks that don't have a great deal of selling pressure with this 2-day pullback. You can see the red here, but notice that the red line, which is also the 2-day, it's just right on the 0 line. So this looks like it may be forming some sort of flag, although it certainly gapped up here. And now it's holding, though. So what does that tell me? It tells me there's not a lot of selling pressure in this stock. Let's look at another one. Same thing here. The red pulled back, the buying opportunity, but you probably want to wait to take out the prior day's high. And you can see that there isn't a lot of selling pressure. How can I see? Look at this red line here on the 2-day force. It's hugging the 0 line. So there's just not a lot of selling pressure here. So that's how you can prospect with this force, or the rule number 1. Now let's go and take a look at Apple. This thing had a shakeout today. I don't know if any of you were watching it during the day, but it was down $5 or $6, and I'm sure it was just a shakeout. Heavy volume, but it turned negative, and you can see that the 2 went well below the 0 line. In other words, there was a lot more selling pressure during that period than I had on this stock up here. So just remember that the ones at the top have the least amount of selling pressure. Of course, you want to look for good charts and so on. You don't just want to buy something because there isn't a lot of selling pressure. You want to find tighter charts if at all possible. Okay, let's just quickly move through these other ones. Now here is just the opposite. This is sell short when the 2-day turns, the 2-day turned back up. The 13-day is negative. It's red here. And the 2 has turned positive. You can see that it's represented in this column right here. So it's 0 and it turned positive. So what this is saying is, as this chart comes back up here towards the 22, if it takes out the prior day's low, you could short it. Now, even in this market, there are some shorts out there. But that's what it's saying. On the other hand, remember that rule, if the 13 is not showing a lot of activity around the 0 line, it's a tough market. It's a non-trending, but well, this was trending, but if you draw a trend line across here, it's kind of stopped. The selling pressure has come off here because the histogram is not huge. All right. Once again, the ones with the least selling pressure are near the top of the list, and the ones with the most selling pressure are at the bottom of the list. Now, CRE has never really recovered, although it had a good up day today. And if you look at this Force Index 13-day histogram here, you can see after this break to the downside, the selling pressure has been coming off because the histogram is getting smaller and smaller as it edges towards the 0 line. So these are just things to look for. You need to do a visual on this in addition to doing the screening. Let's see if we can find anything here. Okay, buy when prices fall to a new low. So this is rule number 3, and let me show you this filter very quickly. Days down, the last 5 greater than or equal to 2. Now, I believe in the program, it's the default is 3. I switched this to 2 to get more candidates, but you can just go in and alter that number and experiment with it. So what I'm looking for here is a pullback and a buying opportunity. It's kind of like the rule number 1, except I'm using the days down instead. It's a powerful technique. Look at all these, down several days in a row and a big bounce today. So when they're down several days in a row and then you get a buy signal, these are worth watching. Rule number 4, there's only one here. That's sell if prices rally to a new high. This is clearly in a downtrend. Rally to a new high, and then it's is this the bottom or is it going further down? Well, I would wait for it to take out that low and then consider shorting it if you're into shorting. I know most people are not. They just use ETFs and so on anymore. But that's the way it works. Now, rule number 5, bulls are in control. Now, JDS Uniphase, this gapped up here. Look at the buying power here in this force histogram. In fact, if you look at this, I'll put my crosshair on, you can see that the buy actually came down here as it was coming off of the 22. And I'm sure it was going into earnings season. If you were comfortable with that, there was some easy, quick money made on that stock. But here's where this would have passed this filter where the bulls are in control. Oh, I sorted on the wrong thing here. Now this, I think this is probably a buyout there. Here's another huge move up today. Now, I don't know if this is a buyout or what, but anyway, the bulls are clearly in control of these. Now, let's go to the bears are in control. What we have, 309 stocks, and the bears are in control of 50 of them. And if I go back up to the bulls are in control of 162 of them, guess what? This is a very quick market indicator to tell you if it's bullish or bearish, because we can just flip back and forth between these two. In our group, we know these stocks all have good earnings, or they wouldn't be in here. But the dominant side of the market so far is the bulls are in control. Are you getting any questions, Ian?
Yes, I have two. Do you hear me?
Yes.
Yes. The first one is from Tom Hamilton, which I answered by typing, but it must have gone into the ether. So let me answer it quickly here. He asks, in the JAD line, what do the green and red lines show? The green line is the accumulation distribution itself, and the red line, if you can bring up a chart, is the velocity. Yes, is the velocity of that. So you might look at, my heavens, I did suggest to him that a clue sometimes is that the red line will precede the green.
Excuse me.
That gives you a clue that something is moving faster, that this stock is about to break upwards or downwards. Yes, right there you see the red line is moving up through the green. And that says we're on our way.
If you open this up, right mouse click on any window and open it up, and you can see, you can change your velocity periods in here. Right now the default is 10 days on the red. What that means is that this shows where the accumulation was, the current accumulation compared to where it was 10 days ago. So if it's moving up sharply, the accumulation is moving up sharply too. Yes. That's all the AD velocity does.
Okay, the other question is a little bit, I'm not too sure, but let me ask it. How do you determine the specific fundamental growth rate percentage in your screen, specifically during these uncommon times? Is this based on experience or research? So, Ron, there may be two ways. The word that's hanging me up is fundamental.
Well, that's why I chose the SG style growth. Now, if you believe earnings growth drives stocks,
good man.
And we know they do. In some instances, not always. I mean, just because you have strong earnings growth, it doesn't mean stocks are going up. But take a look at Apple. Take a look at IBM. You know, what do you think's driving these stocks? Those are fundamental considerations, and that is all in this filter. And this is why. Oh, that's the wrong filter. Sorry about that. I'm not going to go back to it, but it's the one where the earnings growth is 20%. Well, here, let me digress just 1 second here from the last workshop, okay? I want to bring up that thing I track every day, Ian.
Yes.
Okay, now this is research. This is my morning report for people who have been to the seminar and also who subscribe to my online DVD. This is what has happened since Monday, the 25th of October,
right,
through this morning. Now, here is RS. These are all of the growth stocks here. What? I don't know what I did. Must have knocked something out of there. Anyway, these are the growth stocks. This group that I'm working with right now, this whole group right here, based upon the last quarters or the earnings around October of last year, this group has returned 16.88%. 157 gainers and 37 losers. So we're talking about 200 stocks here based upon earnings growth. And that is what we look at. Now, we really enhance this by applying an RS95 filter. In other words, the relative strength had to be 95 or above. That has returned 23.07% and greater than 0.70 on the Bollinger Bands returned 22.06. But our base group is this SG style growth group, and that is based upon fundamentals, and this is the proof right here. I mean, you can go back if the market's strong, especially. That's what you want to look at. You want to be in some stocks that are showing good growth and good relative strength. Now you can see the semiconductor stocks have led the way. These things have gone crazy. 17 gainers, 0 losers over that time period, because that's where the money has been flowing into these semiconductor stocks. But these are just quick filters that we applied at the workshop. 15 gainers, 3 losers, 8 gainers, 1 loser, and here's another one, breakouts greater than 25-day high, 10 to 1. So these are spectacular returns in, what, 3.5 months?
Yeah.
Anyway, I'll get out of there. So,
but
yes.
Ron, I think we can enforce this point on the fly here. If you just bring up Acme Packet like a good soul on the chart, it's the 5th one down.
Yeah, I see it now.
There you go. Now, just click on that.
Let me just get a different. Well, this chart's fine.
That's it. Just click there. There you are. Now, how much better could you expect than that? Look at the earnings. 0310, 128%, 157%, 122%, 160%. Look at the EPS rank, 97, 99 for RS and group rank of 96. Look at the accumulation distribution, 63.1. In an instant, you know that you've got a winner. Look, you don't have to do all that. All you do is look at the red and blue line that George and Matt have provided, and instantly you know that it's flying in terms of its fundamentals. Now, if you click down on the right arrow to show the next, yep, there, look at the, of course, it's got a huge PE. You say, oh, I'm afraid of PE. I tell you, when the market is strong, these are the ones, don't worry about PE. Heaven help you, on the other hand, when the market turns down. But the ROE is good.
Yeah, the ROE is really good.
Close to 17%.
Let's see if NFLX is in here. Now, it didn't make the cut for some reason.
Well, try an itty-bitty. Well, there's Baidu right below it. And there you are again. When you see numbers like that constantly, 134, 140, you know instantly they're either box 7 or box 1 stocks. You say, what's a box 1 stock and a box 7? It's a secret that only you people know with HGSI. What it says is that these are the leading stocks with strong earnings. You go look it up as to what box 7 stocks are all about. But I'm getting off the point. That's what you're looking for with the fundamentals. And you find them in the SG growth group.
Yeah, you know, everything, when you create a filter, it's very limiting, of course, but you have to start somewhere. And you're going to miss a few stocks that may not quite, you know, meet the criteria, but you can always experiment with these filters. But we found this to be, you know, a good way to go.
Dominic, did we answer your question? If you can just type in yes, we'd appreciate it, or no. Thank you. Right. It's all set. Move on.
Okay. Yeah, now let me see where I was. Okay, I want to get rid of that. Okay, now let's move on to the. I've covered all of the force rules. Now let's move on to the demand here. Essentially, it's the force index again, but like I said, I have sorted these in the combo to get the ones that are crossing over today. Notice I'm sorted on the raw combo. Notice all the zeros right here. All of these cross to the upside today, and the 13-day force is positive on all of these. Both have to be positive or it won't pass the filter. Now here is a little trick. What do I do with all these zeros? I mean, you know, I want to look at the best ones. Well, you can do a lot of things here, and what I like to do is click on this A to Z, and then you can do a secondary sort. Let me get this over here so we can see it. We'll do a secondary sort, and let's use our other impulse indicator. Let's use our %AD. So I want to find the ones crossing over today with the highest %AD, and you can see it's A accumulation, but this secondary sort gives me the number. Well, it isn't visible in here, but it's the highest one based upon that. So as I go down here, notice all these are zeros, clear down to number 62. So there was some demand today for these stocks. Now, if I bring this up, this is Nordson Corporation. You can see that it had a candle. Look at the accumulation here. Remember, I sorted as my secondary sort on %AD, and look, it's up here and it's near the top. This one is under accumulation, and it has been. Now let me go to my demand supply charts, and notice that the 13 has been positive since here, the green area, and the green up here. Here was a pullback and then a buy today. Volume coming into it also. So this is one you could watch tomorrow. Remember, I'm not giving any recommendations, but that's just how you can prospect for these. Now here's Valero. Look at this histogram here. Can you see those lines? This has been under strong accumulation based upon the force 13 because this histogram is huge. Now let's just quickly flip over to this other chart and notice that it's under A accumulation. Of course it is, because I sorted on the %AD. This stock looks like it wants to go higher. Now, once again, I'm not recommending it, but see what I'm looking for? A gap up. It's closed at its high 2 out of the last 3 days, volume coming into it today. But this is how I can quickly get to these things with this demand key. Okay, let's move on down to the next one. Now, the first demand key, I don't have a minimum requirement of days since the force 13 crossed over, but on this one, I have a 10-day minimum. Notice that these stocks, the 13 has been positive for at least 10 days. What I'm looking for here are stocks that have been showing some strength based upon the 13-day force, and now they're going again. We looked at Valero. Let's look at Fairchild. So you can see, well, I need to get back to that demands chart. Anyway, here's the pullback. Here is the demand again. And notice that this is a minimum of 10 days. So what I'm looking for are stocks that have been showing strength with the 13-day histogram. And look at all these pullback points on this stock. I mean, this is really very, very nice. And it's a tight chart. Look how tight it is. This was as loose as it got, and it bounced right back and took off again. Once again, strong earnings growth.
By the way, let me come in here. Whoops. Yeah. Look over on the complete left-hand side to 0309, 0609, and 0909. Notice that the earnings are all negative.
Right.
And then 1209, bang, 283%. And look at it since then. That's what you're looking for. When, after all, this is Fairchild Semiconductors. They've been around for donkey's years. When you see a major change and shift like that from negative earnings to strong earnings, that's when you want to get them.
And we do have a screen for that,
Sure.
which is a greater than 25% increase compared to the prior quarter. So, but that's not in here. Okay. All right. So that is that one, and this one is just if the 13 crossed over today. Notice that the 13 column had to cross today. So there's probably a big move, or there was a move today anyway with both of these crossing. So you have three choices. And then looking at the supply side, it's just the opposite. Notice how everything's blood red here, and the numbers, sorted on the numbers, the crossover day is 0, and then it goes down to 9. So there are stocks that are going down. Let's just take a look at well, you can see the break there, but it's still negative here on both of these. That's probably not a great example, but here's one that's looks like it's going to continue to be weak. So that's the supply side. So you can see why I call these demand and supply. I hope you can anyway. But I find them very, very useful. Now, as far as getting into these other force rules, they're all here. I'm not going to cover all of these because I think I've given you enough of that, but you can come in here and if you open these up, if you click on this, I have under the comments, I believe all of these have comments in here, so it shows you what these do. It's just the highest DMA force up or at the top of the list. Okay, so, and they're all pretty self-explanatory. I just don't want to spend a lot of time on them. What I do want to do is go to all securities. Well, actually, well, let's do the all securities quickly. What time is it? We've got about 15, 20 more minutes.
I have a question to answer also, but I'll let you do your thing first.
No, go ahead.
Well, now, Charles asks, how do we get the impulse indicators? So I'm just itching to show them the WC chart.
Well, these are all impulse indicators.
Yes, they are, but how do we get the impulse indicators? But so if you can just bring up a chart that shows it on the WC immediately. By the way, these are, as he says, impulse indicators, but the whole menu is right there in a second. There you go, and now you got them all. You say, oh my heavens. But what Ron is covering, of course, as you can see, is the force index 13 and 2 DMA, which is in the middle at the top. And down at the bottom, there's the kahunas and the phoenixes and the eurekas. And by heavens, when they flash, as I showed last week, I'm sure some of you attended, when you get 2 greens and 2 blues down at the bottom, or a blue, off to the races. There she goes. And that's the roadmap to hog heaven. Look at it. On 12-1, they took off. And likewise, everything turned green. This gives you all the impulse indicators. Now you say, where do you get them? Just right mouse click in the window at the bottom.
Which one?
The bottom, yeah. Right mouse click and show the indicator and kahunas. And there they are. Tells you exactly what they are and when they fire. You don't have to do anything. It tells you when they fire. Now, if you want to filter on them, you can do that too.
Well,
I hope that's a quick answer for Charles.
If you were filtering on bulls in control, when this fired right here, you just look at this chart, and this fired at the same time. Look at the histogram on the force 13 going up, and the Bollinger ribbon was green and so on, and accumulation was B and it went to A. So you can get just a quick view of everything in here. But these are all what we categorize as impulse indicators.
By the way, when do you think this market showed that it was moving again before the Santa Claus rally? Right there, 12-1. He puts his crosshairs on 12-1, the one before. There,
Right there.
Right there, that's it. And the indices fired, the industry groups fired, the ETFs fired, and these stocks fired. They all flew. That was the signal to get on with it. And look at the ride you had for now, the best part from there, 2.5 months. My heavens, that's the best part of 45 or 50 days.
Okay.
Does that take care of you, Charles? Just type yes or no, or maybe. Ah, good man. Charles says yes.
But what we're trying to do is tie all these together. It's like when I was showing the slides on the elder rules. It said the last slide said you should look for confirming indicators, and as we just showed you, there were plenty of confirming indicators there. Now let's go quickly to all securities, and then if I click on accumulation A with the ETFs, notice that only ETFs come up here. And let's look at these numbers up here. 151, 153 on the B's, 67 on the C's, 64 on the D's, and 38. But I'm sure there are inverse in here, so that's kind of screwing things up too. But if you do this with stocks, you can get a quick read for the strength of the market. Now here's accumulation A, 561, 1275 in B, and the I charts, by the way, tell you if accumulation's coming or going. And then C is 749, D is 509, and only 95 in E. So this quickly shows you the strength of the market. Now here's another little trick. Let's say you don't want to buy an A accumulation stock, okay? You want to buy a C accumulation. Well, let's make it a B. A B or C, either one. Now, what's my sort here? I'm still sorted on the raw combo plus the percent AD. So, as I either do a B or a C, what this is, let's do the C. That probably makes more sense. What this tells me is that research in motion, or RIM, is at the top of the C accumulation, and look at it, starting to go again. So what I'm saying is sort on the raw combo, do a secondary sort on the percent AD, and you're going to get the stocks with the highest accumulation within this category at the top of the list. Well, that one. Well, look at this one here. So, I mean, it's just a way, if you don't want to buy, if you're looking to buy something which hasn't been accumulated yet, maybe just starting to move, that's the way to do it. Or let's try 1D, and then I'll move on. Here's FedEx. That got down to D, and look at this. Here it held support for a long time. Big move up today. And if you look up here, you'll see that it's D accumulation, or actually distribution. But this is at the top of the list. Now if I go down at the bottom of the list, Ford Motor Company has fallen down here, and look at this. It was actually D accumulation. It's back, I'm sorry, E. It's back to D now. But this fell out of favor. And this is one of the weaker stocks in this category. Does that all make sense to you? I hope. So you can just look for accumulation, but look for the top stocks under accumulation that haven't gone up into the next level. Okay, now that's that, and we'll finish off here by doing some top-down. And I'll just use the demand. Actually, let me do a couple of these. What I'm doing here is showing you that you can use these for screening for stocks or ETFs, or you can use it on the market indexes. Now, I'm in the Major Markets Plus folder down in my area, and notice the Dow turned negative on the forced 2-day, but the 13 has been positive for 9 days. We know the Dow's had this incredible run, but it's pulled back a little bit now, just very slightly. And I want to change charts here. A little bit cleaner here. But see how strong this histogram has been here? Well above the zero line. And now it's losing a little momentum, but not much. It was a heavy volume day today. I don't know if you've noticed that or not, but anyway, it was. But I want to just move down here. Let me go to the ETFs. It's easier to do this. So I have major market ETFs, and what do I have? 31 of these. And if I click up here, I can reapply the filter. This will show me out of these ETFs that I have in here which ones are pulling back for the day, and they may be potential trades the following day. Now this is pulled back, but look how this is held up. I mean, it hasn't been doing anything for weeks, but it looks like it wants to go higher because it's been closing towards the top of its range, or towards the bars are closing near their high. But you can quickly get a feel for what the market's doing just by clicking on these rules or by clicking on the demand rules. I know I'm going kind of fast here, but what I'm saying is this is a quick way to see where the strength is. Now the Russell 2000, both of these, the IWO and the IWM, turned positive again today. I mean, money is continuing to flow into these small cap stocks, and this is just a way to stay on top of them, because you can quickly see if the demand is there or where there's supply. Now look at the supply. This China index has been struggling for a long time now. And natural gas, this was the coldest part of the winter. Well, it's pretty cold right now, but natural gas cannot get any footing. And then, of course, this is some VIX. But just by doing that, you can quickly get a feel for the market. But let me go down here to the broad market indices, and I want to go into the IM industries. Okay, this is all of the groups. Now notice the zeros here on these groups. These crossed over today on the Force Index 2-day. These are all zeros, and I should still be sorted on the percent AD I am. As I hold this mouse over here, notice that it shows up. So this shows me that the Machine Construction Mining Index is very strong, and it's coming back again today. It went up here, pulled back for a couple of days. Here's your red bar. Now it's going again. Now if you want to find the stocks that are in there that are doing the same thing, you just right mouse click. Same filter is here. Here's the index, and it's Caterpillar. Did the same thing, pulled back, and it's going again, or trying to, and Manitowoc. This one pulled back several days ago, but this is how you can go top down and look for the stocks which meet that criteria. Let me go back to that one. I want to show you something else here. Okay, so this is the demand, but what if you want to look for other stocks in here? Just bring this up, and if you're looking for the Rule 1, Elder Rule 1, here are some stocks that have pulled back that are still in that same group. So you don't just have to stick with the demand 1 or 2. You can go to the other force indexes and maybe find a stock that's pulling back here and looks like it wants to go. Now there's a buyout there. But this is a good example here. It shot up, then it started losing some power, gapped clear down here, and now it's moving back up again. So if you're in a group and you're looking at strength, okay, let me get back here where I was. If you're looking at strength, you can massage that group and look for all kinds of different types of stocks. Here, this is the demand, the crossover today, but if I want to look for the longer term, I just go to demand 2 or if I just want the bulls in control, I just go down and click on that, and I can look at a variety of stocks in that group. I know which groups are strong because they're showing strong demand. Any questions about that?
No, it all seems they like what they see, Ron. Good stuff.
Okay, well, I really don't have much more, so if anybody has any questions, let me check my list here. You can't see my list, but no, I covered everything I wanted to.
By the way, just a little advertisement for next time. Those of you who have asked about, all right, there is a question just come up, and I'll cover that in a second. Those of you who are asking about the high jump, you'll get that the next time. But if you want to learn a little bit about the high jump, go to my blog. And you will find on the latest blog, in the last chart, I show you how I calculate what might be a potential high jump for the market in terms of the NASDAQ. You say, what's the high jump, Ian? In other words, what might be a topping action and where might it go? And what I'm saying is that it looks to me, based on past history, that we should get to about 28.30 if the market continues up. If it gets any higher, well, it'll be pretty extended by then. So there you are. Now then.
Anyway,
we've got a few questions here.
If you have questions about the program, George has done a great job on in creating this help file, and you can find answers to most things in here. If you just click on help or information up here and then do a search or look at the index or look at the contents.
Yes.
Okay.
Gene is asking, is the elder impulse built into the HGSI? I think the answer is no, but you know that better than I do.
No, it's not built into it.
All right, and Tom says, great job, thanks. Richard Wyckoff would be proud. Oh, good man.
Well, I hope so.
No, you're out of luck, Gene. No, not at the moment. The impulse is not in there.
You could ask George to put it on the list.
Yeah, behind all that I've asked for.
It wouldn't go to the top of the list?
Consider it on the list.
Okay, good. See, there's George. He's out there in cyberspace listening.
Right.
Anyway, I made it through. I didn't know if I would or not due to this cold, but I hope I came through all right. And I managed not to cough, I believe, so, or it was just very minor. So anyway, thanks for listening.
And I hope we see you again in 2 weeks' time.